Morning guys, hope you're well. Here we are, Monday morning. Markets are a bit, well, let's just say they're going to have some fun and games. I'll probably won't be trading till 9 o'clock onwards, unless something spectacular comes out. But I'd rather be safe than sorry. So if I flick this over and just pull this across. Now, yesterday in the live stream, I was asked about how this works. It's very, very simple, guys. And the easiest way is to look at it this way. Okay. Right. This side tells me what my anchor chart is for the given pair. If there isn't an anchor chart highlighted, it means that pair is useless. In other words, it's sitting on top of each other and there's no real trade in amongst it. Okay, so that's the first quick reference if you're just looking at multiple pairs, and it gives you an idea of what the daily ATR is as well. So again, you can bind it out if you're going sort of one step up, one step down. In other words, if the price is here and you're looking at Aussie CAD, you can mark 64 above it, 64 below it from the point of open of the daily. Why is that? Because that's how far it can stretch if it never looked back. Okay. This section gives you the market pick based on change of strength and the current strength. Now, at the minute, there isn't anything that is really overpowering another one, which is why it's only got the strongest here, because the weakest is not significantly weaker. So it's not pulling them out. The next section is this. This is the majors. They will move every day regardless of what the strength and change of strength is showing. Okay. So even a small move in here can be exaggerated. In other words, it's going to be more than your 10 pips. And again, what it does, it looks at the strength, and I'll come on to that in a second. And it works out whether or not it's going to be worthwhile looking at, yes or no. Very simple. And it's pulled out 3, as you can see. And it'll say it's good. Good to go. In other words, look at it. And then what it's telling you is what the conditions are that's made it good. So is it gaining? So it's gaining ground over its last sample of data. Slowing down, obviously it's slowing down, which is good for reversal trading. A swap, change in sentiment. Again, it's come to a level, it's bounced and boof, off it goes. Okay, so that's what they are. Obviously, the chart is just the anchor chart. Okay, then you come down to these two. Now, what these two are, this is the current state of play. So at the moment, it's telling you the CAD is the strongest and the euro is the weakest, and it's on a sliding scale. But what it's trying to do is find something that is significantly stronger than the weaker one, and it'll drop it in here. Well, it's not, because it's only 24 to 46. It needs to be 2 to 3 times greater to show that movement. Okay. On this side, it then tells you what the change of strength is from the last sample of data. And what you're looking for here, again, is that big movement. So if you can say, let's have a look. So we've got the CAD, which is 46 at the strongest. Where is it on this scale? Well, it might be the strongest, but it's losing ground. So does that mean that that's petering out? Is it starting to slow down? And the euro has lost a lot of ground. Now, it's not necessarily a bad thing, you know, because if it loses a mass amount of ground over a small period of time, it becomes good value. So it doesn't mean to say it's going to continue to be weak. It could actually be at a point where it becomes sort of a viable option to start buying it. And this is sort of the way it works. And it's like the JPY, it's had a surge of strength. If it's surged massively and it continues to do it. It's the same principle as looking at a chart. It can't continue in a single direction. A lot of the time, what it's telling you is the flush out, because there's always a burst at the end of a move, and this change of strength can help you do that. So again, it's painting pictures for you all the time. This one here, it's just telling you what it is. So if you look at your anchor chart, your analyst chart, it'll tell you sort of where the big pictures are. So you can look at your daily and get an overall view of what's going on, and then come down into a reasonable entry chart. Okay, so it's just a heads up on that. And then finally in the middle is the bias section. And the bias section is just the markets that I'm particularly looking at, or if you guys decide that you want to sort of get me to work it out for you, it'll end up in here. It's checked at the top of each hour. So this one was done at 7 a.m. And what it'll tell me is what the direction is. It's based on a mathematical equation. And it's saying all of these are buys. Tells me the change of strength from the last sample of data last week. It also tells me whether or not I should be looking for a trade, or whether I should be sitting on my hands, and what chart to be looking at. Well, this one, they're all in trade. So they're all pretty ready this hour. And where am I looking? The hours chart. Very, very simple. Now, if it said no trade here, just means don't even bother looking at it. There's no point. If it said done, means that's been traded and finished for the day. And if it says it's in trade, it means I've pressed the button and it's ready to go. So that's how this all works. I hope that kind of makes sense. But the charts, even though it's saying they're ready to trade, it's Monday morning. I don't like trading on a Monday morning. I like to see what's going on, but I still build my sheet up through the morning till I get a decent trade, and I'll be looking probably about 9 o'clock at these markets. Okay, so I'll see you sometime before 9 for the market that I'm going to be analysing, and we'll take it from there. So catch you soon, guys.